And now we bring you a special WION segment called Money Matters because Money Matters. Well, most Indians know about stocks, mutual funds and ETFs, but few actually invest. This is not me saying or anyone else. After a gap of 10 years, the Securities and Exchange Board of India has conducted the biggest investor survey. The regulator survey, which was released just last week, covered over 90,000 households, and the results show that India's investment culture still prefers safety over risk. Here are a few takeaways from what it had said. Now, when it comes to awareness, the SEBI Investors Survey tells a different story. 63% of Indian households know about market products, but only 9.5% actually invest, with urban participation that is said to be higher at 15%. Rural stands at just 6% mark. Delhi and Gujarat have the highest investor numbers according to this survey. While the Indian markets have seen growth and a surge in demat accounts, investor participation has not essentially kept up. The survey shows it's India's risks aversion at play. Nearly 80% of households prioritize capital preservation, while only 6% show higher risk tolerance. Fear of losing money, limited knowledge and even trust deficit keep most investors at bay. As per the survey, 79% of Gen Z households also display risk-averse behavior. But the question is, what is stopping investor to investment? That is what the survey says, according to which many people still find the markets complex or intimidating, and the complexities and lack of accessible information are the top barriers as per the survey, followed by fear of losses, low trust in financial institutions and too many product options, which confuse investor sentiment as well. But there's also good news linked to that. The capital market regulator identified a category of individuals termed intenders. The survey reveals that about 22% of non-investors plan to enter the market next year. Motivation comes from easy digital process, lower entry costs and access to financial education. Success stories and trusted guidance also encourage them to make their first investment. The report highlights that the source of information for these investors has dramatically shifted, with personal contacts, finfluencers and digital peer groups remain the top sources of information across security market products. The report also highlights that while 59% of the investors turn to friends, family or even colleagues for the usual source of information for market products, 56% investors turned to finfluencers on social media platforms, with 93% of their followers finding them moderately to highly credible. Alarming as it sounds, 62% of these investors admit to making some or most of their investment decisions based on finfluencer recommendations. The question also arises, what does SEBI plan to do now? SEBI reveals in the survey that they are planning to make investing easier and more accessible, with an aim to simplify process, build trust, expand regional language content, and even educate through social and digital media. All steps are designed to help more people move from aware to active investors.